Welcome to the Mesa Revenue Partners podcast. We provide valuable information on the topic of business debt collection. Mesa Revenue Partners is an Arizona commercial collections agency and affiliate of Altus Receivables Management, serving companies throughout the United States and abroad. We assist in corporate debt recovery, and we want to help your company streamline its cash flow and restore lost revenue.
In this episode, we'll share essential cash flow strategies to help your business not only survive, but thrive during challenging times. As businesses face the challenges of an economic downturn, one of the most crucial factors that can determine whether they survive or not is effective cash flow management. In times of financial instability, businesses may struggle with decreased revenue, delayed payments, or higher operating costs. Understanding how to manage cash flow in such times is essential for sustaining operations, ensuring long-term success, and taking advantage of potential opportunities for growth. Effective cash flow management allows businesses to maintain liquidity, avoid unnecessary debt, and ensure that they can keep their operations running smoothly, even when external conditions become challenging. In some cases, businesses may need to consider commercial litigation services to recover unpaid debts and protect their cash flow. In this podcast, we will explore the importance of cash flow management and provide strategic insights into how businesses can navigate an economic downturn successfully. Let's start by exploring how your business can uncover hidden cash and stay resilient during a crisis. During times of crisis, the ability to maintain a steady flow of cash becomes more important than ever. Here are several strategies businesses can implement to ensure they stay resilient in tough economic conditions. First, let's take a look at liquidity maintenance. The first and most important step in managing cash flow is ensuring that the business maintains adequate liquidity. Liquidity refers to how easily a business can convert its assets into cash to meet its obligations. During an economic downturn, many businesses may experience disruptions in their revenue streams, which makes maintaining liquidity even more vital. By carefully managing your cash reserves and monitoring your liquidity position, you can ensure that you have the resources necessary to continue operations, pay employees, and cover essential costs, even when incoming revenue is delayed. Key actions to maintain liquidity include: monitor your cash flow regularly, reduce non-essential expenses, prioritize cash payments and short-term debt obligations, and create a financial buffer for emergencies. Next, let's talk about debt avoidance. Another key factor in cash flow management during a recession is avoiding excessive debt. Relying on credit can lead to cash flow problems, especially when revenue is uncertain. Many businesses find themselves in financial trouble when they have significant liabilities but limited cash inflow. It's crucial to avoid accumulating excessive debt during a downturn and focus on maintaining financial flexibility. This is where working with a commercial debt collection agency can help recover outstanding payments, thereby improving cash flow without adding to your debt load. Tips to avoid unnecessary debt include the following: evaluate your business's need for loans or credit. Consider using cash reserves instead of borrowing. Focus on paying down existing liabilities. And be cautious when extending payment terms to customers. Remember to solidify your debt collections process. Maintaining a solid and efficient debt collections process is another crucial step in managing cash flow during tough times. Many businesses struggle with overdue invoices and late payments, which can significantly impact cash flow. It's essential to work with a business-to-business commercial collections agency that specializes in recovering unpaid debts from other businesses. A professional collections agency can help accelerate the recovery of outstanding payments and improve cash flow, giving your business the financial stability it needs to weather a downturn. Implementing a strong collections process ensures that you can minimize the impact of unpaid invoices on your bottom line. Key tips for improving your debt collections process include the following: regularly follow up on overdue invoices, send payment reminders and use collection letters, offer early payment discounts to encourage faster payments, and work with a trusted commercial investigations agency to recover debts efficiently. Let's now focus on the strategic opportunities. While a downturn may seem like a time to tighten belts, it can also present opportunities for businesses to invest strategically. For example, some companies may find themselves in a position to acquire competitors, expand into new markets, or invest in technology to improve efficiency. By managing cash flow wisely, businesses can position themselves to take advantage of these strategic opportunities without compromising their financial stability. In this way, effective cash flow management during a recession can open doors to long-term success and growth. Strategic opportunities to consider during a downturn include the following. Look for acquisition or partnership opportunities. Invest in cost-saving technologies or automation. Expand into new geographic markets or customer segments. And explore online platforms to diversify your sales channels. Now, let's review some effective strategies for cash flow management during a recession. In addition to maintaining liquidity and avoiding excessive debt, businesses can employ several specific strategies to improve their cash flow during an economic downturn. First, you could improve cash flow forecasting. One of the best ways to manage cash flow during uncertain times is to improve cash flow forecasting. A clear and accurate forecast will allow businesses to anticipate shortfalls in cash and take proactive measures to address them. By regularly reviewing cash flow projections, business owners can adjust spending plans, accelerate receivables, or explore financing options in advance. Effective forecasting is an essential tool for navigating a downturn successfully. To improve cash flow forecasting, keep in mind these tips. Use accounting software to track and predict cash flow. Regularly review financial reports to adjust projections. Plan for potential disruptions in revenue and expenses. And be conservative with cash flow estimates to avoid surprises. In cases where cash flow issues arise due to unpaid invoices or overdue payments, a commercial collections litigation strategy can help businesses recover outstanding debts and improve liquidity. Taking a structured approach to collections can prevent financial difficulties from worsening and provide the necessary cash to continue operations. Don't forget to reduce overhead costs. Another key strategy for improving cash flow during a recession is to reduce overhead costs. Businesses can evaluate their operating expenses and identify areas where they can cut back without sacrificing quality. This could include renegotiating contracts with suppliers, eliminating unnecessary overhead, or reducing energy consumption. By trimming expenses, businesses can free up more cash for essential activities and increase their chances of weathering the economic storm. Effective ways to reduce overhead costs include the following. Negotiate better deals with suppliers and vendors. Streamline your operations to improve efficiency. Outsource non-core functions to reduce labor costs. And implement energy-saving practices to lower utility bills. Next, it's crucial to accelerate receivables. One of the quickest ways to improve cash flow is by accelerating receivables. This means ensuring that customers pay their invoices more quickly, thereby increasing the speed at which cash comes into the business. There are several strategies that businesses can use to encourage faster payments, such as offering discounts for early payments or implementing more stringent payment terms. A business debt collection agency can also assist in ensuring that outstanding invoices are paid promptly, helping to speed up the cash inflow process. Ways to accelerate receivables include the following. Set clear payment terms and enforce them. Offer early payment discounts to incentivize faster payments. Send invoices immediately after goods or services are delivered. And use digital invoicing systems to speed up the payment process. Another important strategy requires to extend payables without damaging relationships. While it's important to accelerate receivables, businesses should also focus on extending payables without damaging relationships with suppliers and creditors. Extending the time allowed to pay vendors can help preserve cash in the short term, but it's crucial to communicate transparently and maintain strong relationships with suppliers. Establishing open lines of communication can help avoid any misunderstandings and ensure that your business continues to have access to the resources it needs to operate efficiently. To extend payables effectively, keep in mind these suggestions. Negotiate extended payment terms with suppliers. Prioritize paying critical vendors while extending terms for others. Be transparent with suppliers about payment delays. And maintain a good relationship with creditors to avoid penalties. You should also diversify revenue streams. Another effective strategy for managing cash flow during a recession is to diversify revenue streams. Relying on a single source of income can be risky, especially when market conditions change unexpectedly. By exploring new products, services, or markets, businesses can reduce their reliance on one revenue stream and create new opportunities for growth. For example, a retail business might expand its online presence, or a service-based business might offer new packages or payment options. Diversifying revenue streams can help stabilize cash flow and create long-term financial security. Ways to diversify revenue streams include the following. Introduce new products or services that align with customer needs. Expand into new markets or regions. Build an online sales platform or offer subscriptions. and create new pricing models or payment plans for customers. It's also important to secure financing early. Securing financing early in a downturn can provide businesses with the cash they need to maintain operations and take advantage of growth opportunities. Whether through traditional bank loans, lines of credit, or investment from venture capital firms, securing financing can give businesses the breathing room they need to navigate uncertain times. However, managing cash flow effectively is also crucial. A corporate collections agency can help ensure that outstanding invoices are paid on time, providing additional cash flow when it's needed most. Early access to capital, combined with efficient collections processes, can help ensure that your business has enough cash flow to keep moving forward, even when revenues are lower than expected. Tips for securing financing during a recession include the following. Apply for loans or credit lines before you need them. Research alternative financing options such as crowdfunding or grants. Ensure your credit score and financial records are in good shape. And present a solid business plan to potential investors. Lastly, implement a strong cash reserve policy. A well-established cash reserve policy can be a lifeline for businesses during an economic downturn. By setting aside a portion of profits in a cash reserve, businesses can ensure that they have funds available to cover unexpected expenses, pay off debt, or invest in strategic opportunities. Having a cash reserve helps businesses remain flexible and resilient, even when external conditions are tough. Key elements of a strong cash reserve policy include the following. Set aside a percentage of profits into a reserve account. Ensure the reserve is easily accessible when needed. Reassess the reserve amount regularly based on business needs. And use the reserve for emergencies or strategic investments. Want to strengthen your cash flow and safeguard your business's future? Contact our debt collection agency today. Cash flow management is critical during an economic downturn, as it can determine whether a business thrives or struggles to survive. By focusing on maintaining liquidity, avoiding excessive debt, solidifying your collections process, and implementing strategic opportunities, businesses can position themselves to weather financial storms. If your business is struggling with cash flow management, consider working with a trusted partner like Mesa Revenue Partners. Our services, including commercial investigations, can help you improve your cash flow and stay resilient in challenging times. Contact us today to learn how we can help you take control of your financial future. Call Mesa Revenue Partners at 480-389-2288 or visit us online at mrpcollects.com.
Welcome to the Mesa Revenue Partners podcast. We provide valuable information on the topic of business debt collection. Mesa Revenue Partners is an Arizona commercial collections agency and affiliate of Altus Receivables Management, serving companies throughout the United States and abroad. We assist in corporate debt recovery, and we want to help your company streamline its cash flow and restore lost revenue.